This is the Recycling, Scrap Metal, Commodities and Economic Report, March 31st, 2025. U.S. weekly raw steel production fell slightly at 1.65 million tons, down 2.5% from last year and down 1.4% year to date. Vehicle tariffs, at least in the short run, are hurting the U.S. steel industry. Cleveland-Cliffs, the third largest U.S. steel mill, just announced more layoffs on top of the ones from a couple of weeks ago. WTI crude oil price rose to $69.36 a barrel on increased sanctions on Venezuela and Iran. Major increased prices, if they happen, will bring more U.S. production. U.S. weekly crude oil production rose slightly to 13.57 million barrels per day, just off last year's record high. Oil companies are resisting higher production to lower prices. Shell Oil announced a major cut in new oil exploration to boost their profits. The U.S. weekly oil rig count fell slightly to 484, but is staying in a tight range. Oil companies are working to keep supplies tight. Tight supplies keep prices higher, which supports their higher profits. Scrap steel number one HMS composite price was steady at $378.33 a gross ton. Tariffs on Canadian scrap metal could keep prices steady, but increased flows in the U.S. are already having shredders dropping prices. Hot rolled coil steel price fell to $44.50 a hundredweight, which is $8.90 a ton. The new 25% tariffs on vehicles are causing market disruption. Higher vehicle prices will hurt vehicle and steel demand. Copper price rose slightly to $5.11 a pound after hitting new highs during the week. There are reports of new copper tariffs by the U.S. Possible tariffs created a surge of copper imports into the U.S. to beat the possible tariffs. Aluminum price fell to $1.16 a pound, which is $25.51 a metric ton, the lowest in 10 weeks. Rising trade tensions are slowing global demand as increased aluminum capacity came online. U.S. U of M March Consumer Sentiment Survey was revised lower to 57. People are feeling worse about personal finances, business conditions, unemployment, and inflation. Current condition was revised higher though. U.S. U of M March year-ahead inflation expectation rose to 5% as consumers are increasingly concerned about inflation. The 5-year inflation expectation, not shown here, was revised up to 4.1%, the highest in 32 years. U.S. February Core Personal Consumption Expenditure Index, called PCE. It's the Federal Reserve's preferred measure of inflation. It rose to 2.8% annually, above the 2.7% forecast. Tariffs are starting to show up in retail prices. U.S. January household savings jumped to 4.6%. The good news is consumers have more income. The bad news is they're saving more due to being concerned about the future. March S&P Global U.S. Manufacturing Purchasing Managers Index. It fell to 49.8, with under 50 being contraction. Manufacturing declined after a February increase. Selling prices rose the most in 25 months, but businesses' sentiment was actually high. U.S. February sales of single-family homes rose 1.8% to a seasonally adjusted annualized rate of 676,000. The good news is that it's up. The bad news is that it's about the rate of 1963, 62 years ago. Wall Street's Dow Jones Industrial Average fell 401 points to 41,584. This was on the rising inflation news and consumer sentiment concerns. The broader index, the S&P 500, has dropped 5 of the last 6 weeks, and it's due to go down this morning. This is Greg Brown. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.